Hi, my name is John Stevenson, the Guaranteed Annuity Guy, and we're going to talk today about annuity fees and what to look out for. So annuities can have pretty hefty fees. It depends on the type of annuity. It depends on a lot of things. So the annuities that I sell usually are very, very low in fees. And just because I don't think you should be paying fees unless you're getting a lot from it, especially when a lot of people are getting promised a lot of things, they don't realize what they're getting charged. So let's dive into it. All right, so the first fee, I would say probably the largest fee, it's kind of an indirect fee, would be commissions, okay? So a lot of guys don't like to talk about commissions. Well, you should ask an advisor how they're getting paid. So I get paid commissions, right? It comes from the insurance company, not from you. But if you were to surrender that policy too early, then they would charge that to you in the form of surrender charges. Okay, so it takes a while for the company to get its money back, but also keep in mind that especially if you're buying a fixed annuity like a MYGA contract, then the annuity company could be buying a bond. And if they have to sell that bond in order to give you your money back, they might incur a loss depending on the interest rates during the time that you surrender the contract. So they pass that on to you in the form of surrender charges. So keep that in mind. So a surrender charge would be, I would say, a form of a fee, but that really only comes to you if you were to surrender your contract early. Now, people that come to me and they want these guaranteed rates for income, or they want guarantees as just for growth, maybe a fixed rate, usually they don't really have to worry about this because they're never going to surrender their contract. You usually only surrender your contract if you bought the wrong one, right? Or if there's a better one that comes along that you just it's just irresistible. Maybe the benefits and features are just so good, it's worth it to surrender. And those do, happen, and it's something to be aware of. Okay, so other fees. Well, you've got variable annuities. Variable annuities were very, very popular about 30 years ago. They're not as popular now just because you can get fixed index annuities that kind of give you a hybrid, right? They give you some of what the variable annuity will give you, but none of the downside, which is kind of nice. So they give you some of the growth, not all of it. A variable annuity will give you a lot more growth than a fixed index annuity, but it also gives you a whole lot more risk and a whole lot more downside. With a fixed index annuity, you don't have any downside. If the market drops, you don't lose a dime. So I love that. Now with a variable annuity, you have lots of different types of fees. You have an income rider fee only if you choose an income rider. But if you don't, you still have other fees. You have admin expenses. A lot of times the average on those is about a 0.3%. So you do have that. And you also have maybe the advisor is charging you an annual fee, kind of like what they charge for assets under management. Since a variable annuity is considered an investment, right, like an equity investment, then advisors like to charge fees for managing that for you. Okay, so you have that, but you also have mutual fund fees. Okay, you are in, mutual funds or equities, and a lot of times they will have charges. So sometimes front-end charges, sometimes back-end charges. So I actually looked at a person's annuity last year, and they were being charged around 6.3% in total fees. And they didn't realize that. They were actually pretty proud of themselves because they were getting actually a guaranteed floor of 6%, and then everything that the index would give them over that. What they didn't realize is that their floor, their minimum 6% that they were earning every year was getting eaten up completely by fees and a little bit extra. So something to think about and to watch out for. Okay. Usually when people are investing into annuities, they want as much growth and of course the least amount of expenses possible. And a lot of times what agents will do is they'll tell you the minimum amount of fees, but they might not tell you what the maximum could be because some of those fees could rise over time and they don't want to lose the sale. And so they might decide not to tell you about that part. So if you come to me, I'm going to tell you about everything. I believe in full transparency. That's really, really important. You don't want to get stuck into one of these and realize you're paying a fee that you knew nothing about. So let's go back to MYGA contracts. Fixed annuities with fixed rates, very similar to CDs when you're looking for just a fixed rate of growth. These usually don't have any fees whatsoever. Okay, you're just getting a straight amount of interest earned every single year. If you're getting, let's say, a 5%, the way the annuity company makes money is they're just making a little extra over that. So that's really how I would say, I guess that could be a fee, but really you're just getting, I love these because you're just getting straight growth. And if you want to take systematic withdrawals, you can certainly do that too. And of course, if you were to surrender it early before the end of the term, then of course you would incur that surrender charge, which we would call a fee, right? A surrender fee. But you're not going to do that, okay? You're going to buy the best annuity contract because you're going to be working with me, and I'm going to show you the best ones out there so you won't ever have to think about surrendering it. Now let's talk about a fixed index annuity. You can get fixed index annuities with absolutely no fees at all. And I usually recommend these if people are not looking for income. Okay, so if people are looking for just growth and they want legacy to leave maybe to their kids or their grandkids, then it's a great option because you can have a lot of growth and have 100% market protection and have absolutely zero fees. So unless, of course, you surrender the contract. But if you're leaving it for legacy and you don't need it for income, you really have no reason to ever surrender them. And so those work out pretty well. Now, if you're looking for income, though, they're not that great for income. So what I would recommend, if you're looking for income, usually a fixed index annuity with an income rider is the best option. And the fee is usually around 1%. I would say on average 1.1, 1.2 is on one of the, I would say some of the top annuities are charging that. And so if you break that down, well, if I was being charged 1 or 1.2% over the lifetime of my annuity, my charges might be substantial. They might hit $100,000 over my lifetime. And you think about that, and you're like, wow, I'm paying that much fees? Well, what am I getting for that? Well, if it's a fixed index annuity with an income rider, you could be getting quite a bit more income than you would without having that rider fee. How much more income? Well, in my experience, it's usually at least double. So if you've got a $500,000 annuity and it's only paying you, let's say, $25,000, $30,000 in guaranteed income without the fee, then that same annuity with the fee might be paying you $70,000 a year. And when you think about that, you do the math, and you're like, all right, well, I'm getting an extra $600,000 or $700,000 in guaranteed income for $100,000. So you have to ask yourself, is paying that $100,000 over your lifetime in fees worth the extra $700,000 in guaranteed income? And usually people say yes. And I would say yes too. So just remember, fees serve a purpose, and if you set it up right, they can benefit you. If you set it up wrong, maybe they'll benefit the advisor. Okay? So you want to make sure you do it right. All right, so I hope that helps. If you want to book a call, go ahead and click the link below this video, and that'll go straight to my calendar. We can talk about annuities, talk about what you're looking for, and I can answer all of your questions. So I'm happy to help, and I appreciate you watching my video. I hope you subscribe. I hope you like it, and look forward to seeing you next time.